Hello and welcome. This is Kathleen Lovito, and I will be your host for today's webinar. Joining me today is the AAFMAA Life Insurance Operations team. AAFMAA stands for American Armed Forces Mutual Aid Association and is the longest-standing not-for-profit association that empowers military families with affordable financial solutions. AAFMAA focuses exclusively on the needs of the military family and works to provide innovative, personalized, and lifestyle-appropriate financial solutions. We accomplish this by being the premier provider of affordable life insurance, expert investment management, customized residential mortgages, and exclusive survivor assistance services, all for the military community, not for profit. This presentation is educational. It's for general information only and is not specific investment, legal, or tax advice for any of you individually. Do not rely on this presentation alone to guide your insurance decisions. Since each individual situation is unique, the life insurance that benefits you the most will not necessarily be the same as another current or former service member. For individual advice, please contact us directly. We produce this webinar series in-house with our own professional staff as a service to our members and to help them better understand the resources available to them. I will now go ahead and turn it over to our presenters to begin the presentation.
Thanks, Kathleen. My name is Clifton Brown, Vice President of Insurance Operations here at AAFMAA. Our team works daily with members in exercising their policy options and maintaining their life insurance policies. However, we are aware many of our members do not know what their policy options are or fail to maintain their information with AAFMAA. Since our members purchase their life insurance to protect their loved ones and assets, we feel it's important to provide the information in this webinar to help them be aware that some policies have benefits besides the death benefit, and the importance of maintaining their information with a life insurance company. The information we're going to cover today is broad, and knowing what specific options you have in your policy requires you to either review your policy contract or contact the company you have your life insurance policy with to discuss and learn about the options that are available to you. With me today is Jayanne Gallagher, team leader of our issue team, and Saray Singham, manager of policyholder services. Over the years, Saray, Jayanne, and their teams have assisted many of our members with questions and concerns regarding maintaining their policies and the benefits that their options have. So let's start by asking Jayanne, what are some of the options that are commonly seen in life insurance policies?
Awesome, thanks, Cliff. So in my experience, one of the most important benefits found in many term policies is the right to convert the current policy to another type of policy. Conversion lets you take either your existing policy and continue coverage under another kind of policy, either to a term policy or to a permanent policy such as whole life or universal life. The main benefit to a conversion right is the guaranteed nature of the conversion right, most often allowing the policy owner to convert the policy without any additional underwriting. So there's two factors driving. You got age and health status. When you convert, you skip the health status piece, you continue that same health status. So regardless of any change in health status, there's protection that the insurers can continue to be insured under the provisions of their current policy. Another way to say that more directly is if the insured becomes uninsurable, they have options to maintain insurance, and nobody ever plans to become uninsurable. It's important to note that this may come at a price. Sometimes the converted policy may be more expensive than if the insured had completed a fully underwritten policy. So if you started a new application. So you do want to make sure you speak to your company to see what your options are. But also people ask if the premium they paid into their current policy transfers to the new policy. It does not. But again, the benefit of conversion is to save your health status so you can continue insurance even if you've experienced health surprises. At AAFMAA, our level term 1 policy allows the owner to convert to a 5-year renewable term just prior to their first reduction in benefit, or to a value-added whole life at any time. What's so great about health conversion options is that it saves the health status of our applicants so that regardless of health changes, they're still able to have some kind of coverage.
Great. Besides conversions, what are some other benefits a policy owner may see in their policy?
Oh, sure. First of all, you have your waiver of premium benefit. That is usually a rider that will pay the life insurance premiums if the insured becomes disabled. The second one is the Vamp Settlement option, which is typically used when somebody becomes either disabled or has a terminal illness, and it gives the insured, so it's a living benefit, it gives the insured some money, whether it's through interest, whether it's a lump sum, or if it's an income settlement. For example, AAFMAA's value-added whole life does include a long-term care settlement option. This is not a rider, you don't pay extra for it. It is just a benefit that's already included in the policy. And that provides the eligible owner the option of converting the proceeds on an eligible insured life into regular periodic payments payable to the owner before the insured's death to help defray the cost of nursing home, custodial, or home health care of the insured. Also, some policies have benefits for children or family members as part of the plan or as a rider you purchased. So for example, and this is a pretty common across other life insurance policies as well, AAFMAA's Little Term 1 policy has a children's benefit in the plan that covers the life of children for $10,000. We also offer a family benefit rider that can be attached to the policy for a small charge to include your spouse as well as eligible children. One of AAFMAA's best benefits is our survivor assistance services. When one of our members passes away, AAFMAA Survivor Services takes care of all the craziness. We stop retirement pay, we stop VA pay. I've had people say to me, this is the only reason that I have come to AAFMAA. I want my wife and kids not to have to navigate that.
Jan, what else would you recommend policy owners consider in relation to their policies?
You know, I really feel like policy owners are too quick to cancel their policies when they don't feel like they need that benefit any longer. Almost all policies allow you to reduce the death benefit for a lower premium, and many whole life policies will allow you to do a reduced paid up, where some death benefit is retained but no future premiums are required. By considering some of these options, policy owners are retaining some of their protection they worked to obtain. And if the company offers other benefits, they can take advantage of those offerings. I have seen some policy owners reduce their death benefit to a lower amount and change their beneficiary to their favorite charity or cause. Also, if you have a permanent policy such as whole life or universal life that is not performing as well as you expected, understand that you have a right to complete a 1035 exchange on the policy to another company without losing the cost basis of your current policy. I've worked with members that have completed a 1035 exchange to AAFMAA's value-added whole life due to our higher crediting rate. A 1035 exchange is your right. You don't have to keep your policy in an underperforming situation.
Thanks, Jan. That's valuable information. Many of our policy owners purchase life insurance and think of it as having only one main benefit, the death benefit, but there are often extra options that should always be considered. My recommendation is for all policy owners to read their life insurance contract to understand their options. I'd like to switch now from policy options to maintaining a life insurance policy. Since life insurance policies are typically bought as a long-term contract, policy owners often forget that they need periodic maintenance. We understand that members purchase life insurance to protect their family and assets, and we want to provide the best service possible when the time comes to assist the family. With this in mind, it's critical to check your policy periodically to make sure all the information we have is up to date so we can seamlessly help your loved ones when your death occurs. So Ray, in your experience of managing the AAFMAA Policy Services team, what are the primary things a policy owner wants to consider in maintaining their policy?
Thanks, Cliff. Several things come to mind. First, contact information is very important. Please let your life insurance company know if you move, change your phone number or email. Many companies may contact you by these methods and you may miss critical information if you don't keep them in the loop. Next, I recommend contacting your insurance company when any of your relationship change. Did you get married? Have a child? Did your beneficiary get married and change their name? Is there any death in the family? Did you get divorced? Many of these changes are important for your life insurance company to know to keep your policies up to date. For example, in some states, a divorce will invalidate your former spouse from being the beneficiary of the plan, even if you expected them to remain the beneficiary. And speaking of beneficiaries, that's such a critical piece of life insurance contract. I recommend checking your beneficiary at least once a year. AAFMAA lists your beneficiary on your annual statement that we send out each February. Some common causes of changing your beneficiary includes marriage, birth, death, and of course, family dynamics. As I previously mentioned, it's important we have contact information for the insured, but it helps if we have contact information on the beneficiary as well.
You mentioned updating beneficiaries. Can people add their minor children as a beneficiary?
Yes, they can, but it's not something that we advise our member to do. Insurance company cannot pay out a death benefit to a minor. In the event of an insured death with AAFMAA, the minor child portion of the death benefit would be held until clear instruction was received by the courts regarding how to pay the benefit. AAFMAA would recommend consulting with your attorney regarding setting up a trust for your minor children.
Great, Saray. Is there anything else that policy owners can do to help their survivors?
When a policy owner of their own policy passes away, a claim is initiated and the proceeds are paid out. When a policy owner of a policy insuring someone else passes away, the ownership of that policy is tied to the deceased policy owner. Often, surviving family member wants to keep life insurance policy, but have to now deal with removing it from the estate of the deceased. In order to change the ownership in this case, the family may have to petition the court or at least work with the executor or the administrator to get the proper paperwork to affect the changes. In many cases, there is something that can be done ahead of time. Check with your life insurance company to see if you can set up a transfer of ownership in the event of your death. At AAFMAA, we allow for a successor ownership to be established to ensure policy ownership is changed seamlessly in the event of the owner death. We commonly see these with parents owning their children policy. If one of the parents own the policy, we always recommend a successor owner form to be completed, naming the spouse as the successor owner. And lastly, we recommend storing your life insurance policy in a safe place and let your trusted survivor know where and how to get it.
Great, Saray. Thanks a lot. This is all great information about policy options and maintaining your life insurance policy. AAFMAA and other insurance companies are here to provide benefits that a policy owner decided was important. In order for us to best protect your survivors, it helps to have updated information. When people move, they remember to update many of their contacts, like the power company or the cable company or their property insurance provider, but they forget to notify their life insurance company. By keeping your life insurance companies up to date on your information, you are helping us help your survivors at a critical time in their lives.
All right, let's go ahead and see if we have any questions from the audience, because I did see some activity over here. And while we're doing that, I'm going to put up the contact slide. So if you think of questions later, you can jot down this information and review it. So the first question I'm seeing come through is, you mentioned necessary beneficiary changes when moving through divorce. What else should I be aware of when divorcing?
You know, this is one of those questions that is just so important. The way that you word your divorce settlement can make a really big difference. So what I want you to remember is that the owner, payer, and beneficiary are all negotiable as part of the settlement. So when you speak to a lawyer, make sure you have a discussion around who's going to have which roles.
All right, so here's our next question that came through. I have a universal life policy from the 80s, and there was very little cash value in it. When I bought the policy, they promised I could pay into it for 20 years and then stop paying. They now called me and said I still need to put money into it. Actually, it's way more than I was originally paying, or else the policy will collapse. Should I get rid of this policy? What can I do?
So unfortunately, this situation is very common. So universal life was very new in the 80s, and the return was based on interest rates, and it was indexed, so it would fluctuate with the interest rate market. The assumption back then was that interest rates would continue to stay that high for decades. And we all know they were extremely high in the 80s, but because it was indexed, the interest rate was not locked in and fluctuated with that environment. As we know now, interest rates have absolutely plummeted since then and have stayed low. While this is really good for mortgages, it's bad for these specific policies. So now premiums are being required to make up for these low interest rates. And since these policies imploded, there are now rules on life insurance when it comes to projections, guarantees, and assumptions. So this is mostly an isolated case. If you do have one of these policies, you can carry the cost basis to a better performing policy through a 1035 exchange. You will be able to exchange the cash value if you have any, but that's not the real reason for doing a 1035 in this case. Your silver lining here is your cost basis transfer. This way, as you start getting more bang for your buck in the new policy, you will not have to pay as much capital gains taxes if you withdraw, because your cost basis will be so high, and the government's just going to treat it like you're withdrawing money from a bank account that you just funded. If you cancel and then start a new one, your cost basis starts at 0. So all that money you paid into it in the past doesn't count for anything anymore. And honestly, a 1035 exchange is not nearly as complicated as it sounds. All we need is a statement from your current insurance, fill out a few forms, and complete a whole life application. It takes months, but we do all the hard work in that time frame.
Great, thank you, Jayanne. So we have one more question we're able to answer today. AAFMAA told me I'm uninsurable, but I wish I had life insurance with you guys. What can I do?
Well, actually, great news. You can qualify for AAFMAA's brand new Veteran Survivor Plan if you are between the ages of 45 and 85. There are no medical questions, and you can establish up to $25,000 of benefit for your family members. Otherwise, if you don't want to take out this plan, I would recommend anybody, even if another insurance company told you you were uninsurable, I would recommend anybody to contact our member services department to talk about what options they have available to them. And sometimes you can be reassessed by another insurance company and receive some favorable outcomes.
Great, thank you so much. So with that, that's all the time we have today, so we'll go ahead and wrap it up. Remember, all the contact information is on the screen for policy services if you'd like to get in contact. Always stay in touch, continue to ask questions, and we'll get back to you within a few days. But that's it for today. Thank you so much for listening, and we look forward to serving you again.